Good evening everyone and welcome to Ask the Trader. It's the January edition and a big welcome to those who watch the saved copied version of this at a later date. Glad to have you all here. Now a lot to go through tonight, usual format, and we're going to get straight into it now. And first up, it's a brief market overview. So what's been going on in the world of trading in the last month? Well, it's been quite a busy time, and for me personally it's been a reasonably tricky couple of months, but we're coming out slightly ahead. But the feel at the moment is it's generally got a lot more bullish. Things are starting to warm up, especially in commodities. The stock indices globally, as we'll see in a minute, starting to warm up, and there's some good trades to be had. And we're going to start with our brief look through commodities, forex, cryptos and stocks, and I'm going to start with Bitcoin. And as you can see the chart here in front of you, we can see that horrible downslope from those highs of 65 odd thousand, but since sort of June time we've been trading very much sideways, and you can see that price bouncing up and down through. But the last few weeks have been very positive for crypto, and it's pushing towards this 25,000 barrier, which can be a key significant break point for it before it can move on up. A failure, then I'm afraid it's back down to the 16,000s and then down below if it breaks that. So that's Bitcoin. But what about other cryptocurrencies we've got? Let's have a quick look. So I've just sorted out, looking at the Binance platform, filtering out technically, using technical analysis to come up with some sort of strong buys and buy type signals. And if we look at the strong buys, we've got AAVE USD, APE USD, one of my favorites there, and further down I think Quant QNT USD as well, OP USD, and I think that looks about it for the strong possible upside movers there at the moment. There's a lot of others in the buy category that you'll be familiar with: Atom, BNB, Bitcoin, Dogecoin, Ethereum, Matic. They're all in there. So that's an encouraging sign in that world, because until recently there was hardly any coins operating in a positive light. So more encouragement there from crypto world. And into stock indices, I've got a selection here for you of some of the more encouraging bigger markets out there. You've got the Australian Stock Exchange top left, pushing on upwards, coming up to highs to break through. The Nifty 50, that's the Indian market. That's one I really want to watch this year. Hopefully it can break on through and push up. FTSE 100 breaking out of that, as you can see, that zigzaggy range that it's been in, and then again breaking up. The DAX, the German stock market, doing very well this year so far. And over to the US, we've got the S&P 500 and NASDAQ 100 in the bottom left corner there, both pushing towards these breaks of the longer term sort of channel patterns. The 1 week spot at the moment is the Nikkei 225. It's been pushing up the last week or so, but really it feels very weak. Japanese economy not doing that well. And finally, China, another area I really like for 23. This is the A50 index, but the other index is also doing very well, breaking on up and looking like it's pushing for a recovery. A lot of stocks there, and a few videos I've done on the Chinese market. If you want to get into that world, check them out. Brief look at the S&P 500. This is my Renko setup here. Top left, this is the VIX. That's the volatility index that is inverse related to the S&P 500 most of the time, and as you can see it's been going down, and that is encouraging for the movement in the S&P 500. And we've got different block sizes here to give me all different trade signals, but we're focusing on this 430 block size one at the moment, and you can see we're breaking out to the top side, pushing on up, but most of the trends, if you actually just had a quick look through the charts, have been pushing on up, trading above their longer term moving averages. Now commodities, another area I like very much, could be good this year. I've done videos on platinum, which is this guy here, ticker PL1, again trading above its longer term moving average, and it's got 30-40% upside in it if it can get going there. Even I think a market like copper could be very interesting as well. We've got that there, goes into most infrastructure products, and again on a bit of a bounce at the moment. And we head into the energy world, where we saw start up there, nat gas falling down. That's US nat gas. I don't know what's been going on in Europe and UK, but I know that my prices for my gas is certainly very high. But looking at that, it's fallen down quite considerably, and often that is quite correlated to other global markets. And gold, that's another good one that's performing very well at the moment. Bounced off that longer term moving average and pushing up to highs. Done a video this week on where I think gold is going. Got to get through that obvious high level around 2100 if it wants to go any higher. And finishing up here with the currency strength for Forex markets, you can see medium term wise we've got the Australian dollar pushing on up, weak still the US dollar, Swiss franc and Canadian. We could say a bit of a mixed bag for the rest of the other majors, and in the longer term it's a bit more obvious. You know, US dollar, Canada very weak, pound, euro, Japanese very strong, so you could put some of those combinations together. And just one other point of note on stocks, trading a lot of US stocks at the moment. AI, an interesting sector to be getting in. Also lithium, I'm going to do a video on lithium coming out. There's going to be, well, there's so much demand for it due to the EV stocks, but there's not a lot coming out of the ground, so I'm going to do a video on my favourite lithium stocks to watch for the coming year. So that is the brief overview of what has been ticking over in the world of trading and financial markets. So let's get into your question. Oh, actually, no, before we even do that, let's get into some announcements. So let's flip on to the right screen. Next, Ask the Trader session, 22nd February. Some dates for those who are in the Traders Club on YouTube. We've got Traders Club members meeting on the 1st of Feb, and then the Traders Academy on the 15th of Feb. And copy trading, for those interested, available next week. We've got some questions tonight on that, so I'm not going to linger on that right now. I'll go into a bit more detail in a second. So let's get on with those questions then. So first up, these are the ones that have come in fresh, and these ones are all from Daryl, and we've got, can you possibly teach us how to find hot stocks and future thinking stocks in more detail, and maybe just for now, and maybe on the paid service for your predictions of these stocks until we get better at doing it ourselves? That is a very big question, Daryl, to do in this session. I think there's some videos on the channel about how I find stocks, many different ways. It could be just from my own interest in certain markets, digging around in sectors. I like to see what sectors are moving, like I talked about the AI, lithium, that sort of thing. Find that very good way of, you know, breaking into finding those hot stocks. You drill down from that sector and then, you know, find out maybe fundamentally why you think something's going to move, and then you use the technical analysis to time your way in. That's most of the way I trade the stocks, and I'm actually putting together a stock trading video at the moment, an introduction to stock trading. So in that it will cover in a lot more detail how you find those hot stocks and the instruments that you can use to maximize the benefit of them. It's not just CFD spread bets, it can be options trading and using the stock underlying itself. So a lot there, Daryl, for that, and just watch out for that video coming soon. So next question from Daryl: if I do my charting in Heikin Ashi, can I switch to line break when it's time to trade? That's a tricky one without seeing the setup. Now you've got two very different chart types there, and I would probably normally say not really, only because the line break chart is very different to the Heikin Ashi chart. But if you've tested it, that Heikin Ashi gives you whatever filters you need to then switch to the line break chart, and it's working. Then there is the beauty with technical analysis, there is no right or wrong answer. If you've tested it and it works, then fine, give it. But just on the basic principles of it, it would be quite tricky. Next question: do brokers place trades against you? They don't individually, but as a group some do. Now you might hear the terminology A and B book. Now, as you know, probably 80-90% of traders lose, and these brokers know that, so they bundle up the people into say the B book, the losers, and then they can trade opposite to you, or let your losses run. Whereas the A bookers, they might hedge the risk because they know they normally win. Now I always check with the brokers I use whether they do that or not, and I don't like that practice very much because they are supposedly brokers. I don't mind them minimising risk to balance out the book, so they're not taking on any risk. But when they're playing against people, then I don't like that. So the people I use normally don't do that sort of stuff. Last question from Daryl: did Darvas buy in as soon as the top of the box was broken, or when it closed above the box? If I buy it as soon as it breaks, isn't there a possibility I'll just keep getting stopped out if my stop loss is just below? Answer that question very quickly. Yes, he did, as it broke through the top of the box, and you can put the stop just under the bottom of that box. That might seem a bit wide, but it's a safer place to do it. And if it hits, it hits. That means the trade's wrong, but more often if you've got the setup right, then that should be a nice safe place to put the stop. And as the trade progresses, if you're buying in, then you can trail that stop underneath the next box when that sort of produces itself at the next level, so you can sort of trail the stop up behind it. That's another method of doing it, but you should be fine as it breaks on through. So questions from Gadget22: I've tried searching for Renko charts with IBKR and Tastyworks, my brokers. Unfortunately, Renko is not available in these broker platforms. Do you recommend using TradingView for Renko, or would you recommend another charting service? Now, this is my thoughts on charts. I never use the ones provided by brokers. I just don't think they're good enough or give you the flexibility to do what you want. So I always run an independent charting platform. Now, in a lot of the stuff I do, I use TradingView. If you've got big budgets, I know it Renko works in Bloomberg and CQG. A more moderate budget, another one like eSignal, I've also used before. So you've got options. Unfortunately, in brokers, they don't often go into that level of granularity and detail in the different charts. Normally just the candlestick or Heikin Ashi at best. So it's very rare that you'll find the full suite. TradingView, very, very good for Renko charts. You can do everything that I do in there, and well, I took it a stage further, and as some of you have seen in that video I produced, I built my own web-based Renko system. So if you've got the programming skills, maybe you could do that as well. Right, so next question: are you able to talk about the up-and-coming copy trade service just to give us a sneak preview, maybe tips we should focus on, MT4 or a specific broker. Right, so it's coming, and some of you might have seen it should be here next week. I'm not going to give too much away, but I'll give you a bit of details to tease you. It's going to be on MT5, going to cover stocks, commodities, Forex, stock markets, ETFs. So there's a lot of markets in there, and it's going to give you two options. You're going to either take the signals and do with them what you like, or you can fully auto copy. So that means you just sit back and let me do what you like. So do what I like. The broker, I'm just finalising the last bits and pieces with them. It's all going to be very user friendly. You'll be able to put it on an app on your phone, check out 24/7 what's going on, and I think it's going to be an exciting service. It's going to be free to join. There's going to be no fees, but the only cost to you, I will be taking a percentage of the profits I make for you. So if I don't make you anything, I don't take anything. I think that's a fair way of doing it. So I'm not going to charge you for the signals, and it's also a great thing to learn from as well. If you're new to trading, you want to see how I do it and how I get in and out of trades, where I set stops. Think of it as an education learning tool as well. But if you want to make a passive income on the side, or maybe diversify some of your portfolio into just letting me trade for you while you still trade well, you can do that. So many options. But next week you should see a lot of videos and content coming out. I'm going to probably do a live stream announcement on it as well, for you guys to understand a bit more, about the performance, expectations, how many trades, that sort of thing, so you get more comfortable with the idea. But that's my teaser for this session, so I'll say no more on that. So I hope that's answered your questions there. So moving on to crypto A to Z, we've got a few questions here. Taking into consideration multiple time frame analysis, 2 chart candlestick layout on trading view. What time frames are best for A, day trading, and B, swing trading? And then we got what basic indicators can be used to include and exclude multi-collinearity and collinearity, and then explaining some moving averages. So they're the 4 questions from crypto A to Z. Now, if I'm understanding the top part right, multiple time frame analysis, 2 chart candlestick layout on trading view. Now, I'm hoping that feeds in. I'm not quite sure what the question is there, but I'm hoping that feeds into the next what time frames. And if you're doing multi time frame analysis, in my introduction to technical analysis get started video, there is the time frame table that I use. It says, say for example, if you're trading you want your 15-minute as your trading window, then use maybe the hour and the 3 hour as your higher time frames on these type of candlestick charts. But if I'm day trading, what are best? It depends on who you are as a trader. If you're down in the 1 and 5 minutes, then well, that's a lot of screen watching, and you've got to have fast fingers. You're like a computer gamer. I don't really go down there because a lot of my charts are taking the time away with Renko, so it's more about price movement. But if I was to day trade 15 minutes, 1 hour, anything above 1 hour, then you're starting to get into swing trading world, I feel. So it's a sort of a crossover there. Swing trading, 3 hours, 4 hours, they seem to be quite popular sort of time frames. You can even do it off the days and the weeks. It depends on how big your trading pot is, your strategy, how long you want to sit on those trades. So hopefully that answers that bit. And basic indicators to be used with collinearity. We've actually got a question on what is multi-collinearity in a minute, but actually, I think I'll go to that first, and it's from Mohammed, who says, what's the meaning of multi-collinearity? Well, broken down, it simply means the multiple counting of the same information. So what do I mean by that? I see a lot of people using charts where they will put on, let's say, a MACD, a moving average. I'm trying to think of ones that are all based off the same thing. Basically, they are built on closing prices, right? So you're getting signals, you're using two different signals off the same input, which is the closing price. So really, you're just double counting what you're seeing. So what we want is a non-collinear environment where we're picking from different types of input that are confirming our analysis. So this is why I've put this table and links into Crypto A to Z's question here, and you'll find that again in the Get Started technical analysis video. But here it is, and you'll get it from this recording. Now I've broken it down into 5 buckets: trend, momentum, volume, volatility, and sentiment. So when you're starting to put combinations together, I like to look down each column and pick one, you know, from maybe 1 or 2, 3, depends on how you're putting your strategy together. But you want something from trend, maybe you're using a moving average, and CP means closing price. So if I'm looking at another trend indicator, I don't want it based off of the closing price. So you've got to then go and try and find something that is not that. But normally if you've picked, say, let's stick with the moving average, then I would be looking for maybe something else to confirm it. So you might go to volume, completely different to closing price. Now remember, in Forex there isn't volume, so you've got to be a little bit careful. But if you're trading stocks, then you might put volume. You might have, say for example, on balance volume or accumulation distribution and the moving average. Or you can put trend and momentum together. But when you're putting the momentum together, don't do it off the closing price. You know, use maybe a stochastics, which is more a volatility based measure. And if you go over to the volatility column, you can maybe put, you know, Bollinger Bands or ATR or something together with that trend. And the one I really like the best, which is probably more independent from most, is the sentiment, where you can use things like commitment of traders data, the VIX, which links up with the S&P 500. We've already seen that today. Currency strength indicators, open interest. So it's about putting together different combinations that are from different inputs and calculations to confirm your overall answer. But if you're basing it all on the same input and you're loading up your charts on that, then you're basically just getting the same answer from the same one thing, and that's going to end, I'm afraid, in a bit of a mess. So think carefully when you put stuff together. Right, and we've also got finally down here explain EMAs and MAs, using 9, 20, 50, 200, 12, 21. I'm assuming that is the popularity of each. Now I can tell you a bit of history about why people use 20, 50, 100, 200, and I can tell you I've learnt this firsthand. When I first started, computers and technology weren't that great, so often you'd have to hand draw the charts, and it's easy to calculate these moving average when it's a round number like 20, 50, 200. So they became very popular. Now as you know, software and technology became easier to use, then people changed the last number to get sort of an edge over those other numbers, and they're also popular. So, you know, call 9 to 20 short term, 50 to 100 medium, 200 maybe longer term. Really like the 200 and the 50 as filters in and across most markets and tools. Don't really use the shorter term quite as much. So I hope that has answered that. And if we just go to Mohammed's question, so we've answered the multiple counting of the same information, multi-collinearity, and finally, could you include the difference between the momentum oscillators? Well, quite difficult, but if you go back to that table, because there are so many of them, we're just basically looking for the speed of the trend movement, and that's the momentum oscillator, and they all tell you whether something's overbought or oversold, and it's how you use that information in between. You know, like the stochastic's got an 80 overbought and a 20 oversold. The CCI, I think it's plus 100, minus 100 or something like that. You know, the RSI 70-30, and you can change those lines. Often some people will use the midline, say like on the RSI the 50. Again, I've got a video out on different ways of using the RSI out there on the channel, but to go through them specifically, that would take a long time, so I suggest you go through that get started technical analysis video in some detail, and you'll get the answers that you need. So that is the pre-sent in questions. It's now time for any other questions you might have. I'm watching my little YouTube chat area at the moment, so if you have anything else, we've whizzed through that in about the first half an hour, so we've got some time left. Anything else for any markets, anything you want to know, now's your chance, ask away. Otherwise it's dinner time for me, so anything out there. I'll give you a moment or so to type something into the chat area. Right, we got another question here. Maybe your view on Forex from Mohammed. Currently, at the moment, if you're talking what I'm thinking, the US dollar's starting to weaken off after a really strong period of time. Let me just flip the screen over to that currency strength chart. Hope you can see that now. And we look in the longer term, we can see that light green line, that's the US dollar falling on down, and this is actually an indicator put on to measure that strength of the US dollar, and you can see it's gone red, which is negative as well. So that allows me to then look for these other majors to pair them up against. So at the moment, Australian dollar, buying that one against the US dollar, the pound, the euro, all looking good at the moment, and I try to get that flow going through these different currency strength time frames, and you can still see in the shorter time frame the US dollar, Canadian dollar still weak, so they're the two I'd be picking on, and then I'd use technical analysis to time my way into those trades. Forex trading I use really, I would say, using technical analysis. I'm aware of the big news events and stories, the timings of those economic schedules events that come out in the week and how they might impact there, but that's all built into my technical analysis. My favourite currency pairs at the moment, probably the GBP USD and AUD USD, and the video I let out today on the dollar index, don't do Forex, don't trade Forex until you know this. The dollar index, and actually I've got set up, I think it's still open. Let me just see, we can open it up anyway. Let's find it, there it is. So I actually like trading the dollar index itself. I find it very easy to do that. Well, a lot easier than tracking down what currency pairs to put. If you watch that video, it explains what it's all about. And again, we've got the strength filter here. This is a weekly one, so showing you that it is very weak at the moment, and it's actually more of a mixed bag. Actually, it's just picking up a bit of strength in that medium term, but just turning south again, and that's the 3 hour chart there of that. And on the Renko side. I've got two different block sizes. Again, it's all coming downwards. So at the moment, weak US dollar, and that's how I sort of think about Forex. And I would say mostly using technical analysis. Also, like other currency pairs that are commodity related, the Australian dollar is one of them, but ones like Norwegian kroner, South African rand, Canadian dollar, CAD JPY is a good oil type combo to put together. So there you go. I hope that answers that question on Forex. I just looking through the chat, I think we are probably done there. So last chance, speak now or forever hold your peace. So we'll call that a wrap, but don't forget, next trader session 22nd February 7:30, and also keep a lookout for copy trading coming this month. That's the big development from my side, and I hope that it's going to give you, like I say, a new way into the world of trading, either watching the signals or, you know, diversifying your portfolio and, you know, putting some maybe funds into just letting me go on auto trade for you. We can discuss that at another time. So there you go. Well, thank you all for joining me tonight, and I hope to see you and hear from you over the coming month, and good luck with the trading. And like I say, I hope to see you all and speak to you all soon. Good night.